What's up, everybody? Raise my chair. How's everybody's weekend going? Just giving it a few more minutes, guys. We'll start live at 2. Always give it a few minutes for people to kind of straggle in. Oh, you know what? I bet this got turned down. Is the volume better now, guys? I don't know if was I quiet there for a minute? All right, good. Nice. Thanks, Danilo. Samo the Dom, what's up? Gonna try to knock this one out a little bit quick today. It's beautiful weather here. My kids and wife are down at the pool, and I need to be at the pool too, guys. In fact, I'm wearing my surf shorts right now. It's nice. I knocked this Sunday prep out on Friday after the market closed, and have just been completely enjoying my whole weekend without looking at any screens. It's a thing of beauty. What's up, Yogi? Yeah, not everybody's blessed with this weather, that is for sure. And I will constantly remind you guys about that. All right, guys. Let's go ahead and just get this started. This is the Sunday Prep, guys. Welcome. If you're just joining us for the first time, make sure you guys subscribe, turn on the notifications. You know, I do this every Sunday. There are other pieces of content we create and put out that are not on the same schedule. So if you're not subscribed and with notifications on, you may miss those things, guys. Let's go through. I want to remember to give shout outs to like Cobra and the other guys this week. I've been forgetting it for the last 2 weeks. But guys, if you need a broker that's reliable, has the best locates, the best commissions, and hands down the best customer service, Cobra is definitely my favorite broker, guys. It's my go-to, my everyday trading. If you want to use Cobra, use the link in the description. You're going to save 25% off your commissions, and you're also going to get a month free of whatever platform you choose. Spikeet. If you guys do not know who Spikeet is, these guys have created a software that allows you to pull historical tick data on stocks going back 20, 30 years, right? Like, you know, we used to have to track data manually. These guys were like, dude, that's so tedious. There's got to be a solution for this. They created the solution, and it's basically enabled us to, you know, one, cut the amount of time we spend doing that work down by a multiple. Like it's night and day, right? But two, you're able to have an idea about a possible edge in the market that you see and you want to test it. You need that data. You need to be able to get a large sample size, and this enables you to do that without having to wait for a few months to pass, so you can have start to collect things that fit that criteria. This allows you to go and cast a large net on a sample size that's historical, right? Scripts to Trade, these are my guys. These guys create the best indicators for Thinkorswim and TradingView. We are working together to create one right now for the True Trader community. It's really coming along nice, and I'm extremely excited about it. I ain't getting paid to say this. These guys are, I couldn't do what I do without some of the tools that they have created, guys. So give them a check out. And you know, if they don't have an indicator already made that you can think of or want, they'll custom make it for you guys, and it's legit. So that's, oh, and of course, here's your guys' earnings. Let me put the earnings up on the screen. Remember, this is the ideas I covered today aren't going to be about any of the earnings plays. There's a webinar on that where you can go and see exactly how I prepare for earnings. So what have I done this weekend? Well, went and played a lot of golf, went to the pool yesterday. Then we actually had a trader meetup. I didn't organize it. A good friend of mine did. We all met at Duckfoot, which is a really cool little microbrewery here in Mira Mesa, where I'm at. And we had a great time. You know, it was a pretty good turnout for, you know, it wasn't well planned in advance, and it wasn't promoted really big. So I was actually really surprised with the turnout. But, you know, a lot of the guys are newer traders, and, you know, I spend a lot of time working with newer traders as it is, right? As part of True Trader, trying to help develop traders over there. And, you know, I've been helping traders on social media, like through Twitter, or they come to me through the YouTube channel that I have. And, you know, I'm not the type of person to turn people away when they're newer. I always try to lend that hand and help. So talking with a bunch of newer traders last night, you know, reiterated some of these things that, you know, all traders that are new or coming into this field of work typically will experience and have to go through. So I figured it would be a good topic to kind of touch on tonight, and then we'll get into the actual prep. So I basically categorize it into three main things that the newer traders are going to face, struggle with, need to figure out the answers to, in order to further their journey. The first thing is managing risk. I know, surprise, right? It's just, it's that dirty word that everybody hates, but you have to do it. And if you don't, you know, your broker will manage your risk for you, and that's definitely not the right way to do it. But it, you know, everybody that I talk to has a general idea of how to manage risk, but there's a difference between executing that risk management well, and, you know, not doing it so well. And, you know, the difference, it can be the difference maker between somebody that is a break-even trader, or maybe still just kind of bleeding out slowly, to a guy that's actually growing exponentially because they're actually cutting losses quick and letting the winners work. And, you know, it doesn't happen overnight, but there are, you know, there's a lot of resources out there that can teach you guys how to manage risk. Obviously, like, I've done webinars on them. I talk about it relentlessly. I'm pretty sure people get sick of me talking about risk management, but yeah, like, that's the one of the three things that I think newer traders really, really struggle with, and when they figure that out, typically hit that stride. The second thing was throwing mud at the wall to see if something sticks. And oftentimes, you know, a trade's going to work, and the newer trader's just going to think, I just need to keep doing that because it worked once, right? Not really understanding whether or not there's an actual edge in what they had done. And the only way to do that is through collecting the data and tracking the setups and defining a system. And when I say that, I think a lot of people think what I'm talking about is, writing an algorithm or, making everything automated. And it doesn't have to be that way. But that doesn't mean you can have a strategy you trade where you have not defined every part of it. You need to understand what to do in every scenario and how to make plans, and that circles right back around to also how to manage your risk when you're in that setup. I mean, it doesn't matter if the setup you trade works 95% of the time. That's still gonna not work every once in a while. 1 out of 20 is not gonna work at a 95% win rate, right? So how are you going to deal with it that 1 time out of 20 when it's not working? You need to understand how to know when it's not working, what to do when it's not working, how to manage that risk, how to keep your risk under control, guys. And the third thing was newer traders tend to want to shortcut the journey, right? They want to grow an account exponentially instead of letting their accounts grow organically. And the thing about that is that the path to consistency actually comes from allowing growth to occur organically. And that happens, one, through, if you don't force things and rush it, you have to sit for longer and have more time in the market. Time in the market is a big thing. You'll hear people refer to it as screen time. I don't necessarily think screen time in itself is the answer. We actually had that discussion last night at that meetup. One of the things I was saying is, you can stare at screens till your eyes bleed. It's not going to help if you don't know what the hell you're looking for, right? So screen time's a big thing, but it has to be focused and purposeful. And, understanding how to grow via position sizing systematically. I think that was really the key that newer traders tend to struggle with, is that they don't really understand the concept of position size and how it relates to risk management and what the correct amount to be risking on a setup is when you're learning. So you'll see bigger traders that have been trading for a long time. They will take some outsized risk when the time is right. But you also have to understand that their accounts are a lot larger. They have a lot more experience and wisdom, and they trust themselves to, if it gets a little bit hairy, to do the right thing and stop out if they need to. Newer traders haven't developed those things yet. You guys really, really need to focus on, starting small and not being embarrassed by it. Stop worrying about what people on Twitter are posting for their P&Ls, and stop worrying about, well, trader X, is taking 50,000 shares short of whatever stock he's trading. Why am I only taking 100 shares? Well, because you guys aren't on the same chapter of your journey. You got to understand that those guys started somewhere, and the only way to give yourself enough runway to learn this craft and to have a chance, even a slim chance, at making this work, is to give yourself enough time to be wrong a lot. And the only way to do that is to keep your size small, keep your losses small. If you're just starting out and you're trading even a $10,000 account, you can't be taking $1,000 losses, right? You only get 10 losses at that size. You should be taking, $20 losses, $10 losses. You really should just be focused on learning how to be consistent and learning how to trade. And this is just, those 3 things really, really resonate with me whenever I work with newer traders. It tends to be one of those 3 things they're struggling with, if not all 3. So if that's you, by God, try to answer those questions for yourself. If you need guidance, you should probably be looking for a mentor. And I'm not saying, I don't need my DMs getting flooded or whatever, but I always try to help. We're over at truetrader.net. If you guys would like to check out the community, we do have that 5-day trial. It's only $30. And that's really just to keep people from, recycling their emails and just keep coming in for free. But again, having a mentor, someone that can point you in the right direction, someone that can help you answer those 3 problems that traders are going to deal with when they're new, that's going to go a long way for you guys. That's all I really wanted to talk about. Let's get into the disclaimer, and then we will do the prep. Guys, neither I, True Trader, or any of its representatives are registered as security broker dealers. I'm not a licensed financial advisor. Nothing I talk about is a solicitation to buy or sell any stocks. It's simply for entertainment purposes only. All right. Let's get into some charts. Here we go. So this, obviously, guys, if you're new to these Sunday preps, we follow a pretty strict format. I always talk about the broader market first. Then we will talk about some sector analysis, and then we'll get into the ideas. So right here, you're looking at the ES. This is the S&P futures. This is what I use to look at the S&P. You guys can use the SPY if you want. The SPY chart always is a bit more gappy because they don't have the overnights. But I don't think there's a right or wrong. If you want to use SPY, go ahead. You'll get pretty much the same ideas. The thing I'm looking at this week, guys, is I think Thursday and Friday we put in what I would consider a near-term bottom. It doesn't mean that this bear market is going to magically disappear or we're going back to all-time highs, but it does feel, though, that, you know, let's just look right here. You see the daily candle on Thursday and then a big green follow-through day on Friday. You know, I think there's plenty of room to the upside, back to the 20-day, back to the 50-day, depending on where the bulls want to try to take this. But I am going to start out the week with probably a more bullish stance, just in the near term, right? So basically the way I'm playing this week is we open, and obviously I do not know if we're going to gap up or down come tomorrow morning. I'll play it by ear when I see where we're opening, but you know, I have plans for every scenario. And basically what I'm looking for is, as long as we hold last week's lows, I'm looking at weakness flushes as actual opportunities for entries on names that have similar setups, right? So things that have also gotten sold off a bit, and you can basically play off of last week's lows. And you'll see that when we get into the ideas. But right now, let's just kind of briefly look. Actually, I do want to go back to the weekly chart real quick and just point out that weekly candle definitely has that big tail. If you look, whenever the SPY's done this, you get those big tails. We do get a bit of a bear market rally right up in the great spots to set up for shorts. But I just don't think the shorts are down here. I think playing with the short side down here is a bit dangerous at this point. So last week's lows is obviously the key support level. If we back this into like a 5-minute chart here, let me get rid of this. You guys can see some of these other levels I'm looking at. So Friday's low a day was a major pivot that I'm going to play off of, because that was also the big spot where we pushed on Thursday. And you can see how many times that tested as well earlier in the week. So let's just call it 39.60. And then there's also the pivot from when Friday had that sell-off and then we bounced. And that's going to put us right around that. I mean, let's just call it 4,000, the psychological round level. And, you know, both of these are going to be a range. You can just say between here and here, you got that monthly pivot right in between. You know, I would look at flushes off the open, depending if we don't gap down right below these levels. I hope I don't have to like say that every time, guys. It should be freaking common sense, right? If we gap down here like to 39.40 or whatever, obviously these levels are not going to be my support levels. In fact, they may become levels I look at as possible resistance. But let's just pretend we're going to open flat or maybe gap up. Those are definitely levels I'm looking at as opportunities to buy flushes on early weakness. Up above, you've got 40.63 is what I'm looking at for resistance, and that level should be clear as day to everybody. You know, it held, and once we got under, it was resistance. So first test up there, I will possibly look. It depends how we get there. If we get there emotionally in a big old parabolic spike, I'll be looking to fade a lot of stuff. The next level is going to be up here at 41.11, and then above that is this 41.50 level. And I've got some levels above which are pretty obvious, but I don't think we're going to rip face all the way up there this week. But if we do, you guys see these levels here. They're marked clearly on the chart. And basically, like I was saying, I want to come to the market with a bullish bias. That doesn't mean I won't change it, right? And if this market rips into some of these really key levels, it's short city for me. Trust me. But I would like to see opportunities to scoop any kind of early weakness come tomorrow morning, and possibly, you know, depending on how Monday closes, that same kind of bias is going to carry over into Tuesday for me as well. All right, let's head over to the Nasdaq. Let me get my panel back over here. Pop up a weekly on this. And I mean, again, very, very similar thoughts on this. Oversold. You guys see this level on the weekly here, this 12, let's just call it 12.9. That's going to be really big resistance for me, to the point where, like, if we were to spike up to those areas, let's look at a daily chart so you can see it a little better. And I'll even have the pivots on just in case. Yeah, you got your quarterly pivot, the 20-day, and it was like the breakdown area. Any kind of rip up into those levels, I am going to be looking to get short. And I say this every week. I will keep saying it because I don't want you guys to think that I'm just going to add as this goes against me. If this doesn't work in these levels, I will take my losses on whatever individual names I'm shorting, and I would re-enter on a push a bit higher into, it looks like about 2 or 3 weeks ago's highs, that 13,555 area. And then, I would have just as much conviction up there as I would into the underside of the 20-day. So let's just break down the support and resistance levels real quick, and then we'll keep it moving. Like I said, I want to get to the pool. Again, these are coming the exact same way I was looking at the S&P. You got Friday's lows, which are going to be, there was a lot of volume trading there. That's going to be a really key inflection point. And it was also, you can see this level has been tested quite a few times. So let's just call it 12,070. And then you also have that pivot low from Friday when we sold off and bounced, right? Just like with the ES. And you can see it's also been a key level, right? So that low is also going to be interesting for me. We're going to call that 12,200. Above that, you're going to have, let's see, 12.5, and then, what is that, 12.7. We'll call it 12.7. This descending trend line here definitely has my attention too. You can see how that's going to line up really well. And in fact, you can see the alert right there. I literally labeled it big level, right? If we rip up into that level, it's going to put us right into that descending trend line, but it's also going to put us into that horizontal resistance. So, like, just a bit of confluence where I have a lot of, I don't want to say a lot, but I do have more conviction into those levels. But we'll see if we can get there first. And then obviously last week's lows, big level on the support side. Again, bullish bias coming in, but if we lose last week's lows, I may take my hands off the gas pedal for a second there and see what the market wants to do, because a lot of people are probably swinging something from those lows on Thursday and maybe added on Friday. And there's a lot of people that have a lot of FOMO right now that are probably, dying to buy the dip off the open like I'm talking about. And if it doesn't hold, I don't want any part of that, right? I want to see if that's going to cause people to capitulate out and maybe give us another little extension down. And then I might look to, again, see if there's some advantageous spots to get long. But I am definitely going to want the prior week's lows to hold on both the S&P and the Nasdaq to keep that bullish bias early in the week. Let's head over to the crypto space real quick, because I know everybody wants to see crypto. I don't know why, but again, we lost some really key levels last week on Bitcoin. The only thing I think that the bulls can really say that is any positive spin on it at all is that they never really got a close below that 28,000 level. But still, like, we flushed right through it, really high volume. I guess you could say that there's a chance this is the capitulation and that's the volume from it, and that this is going to put in a low here that's important. But I still think we've got a lot of work cut out for us if the bulls want to push that back into any sort of levels where you can start to have confidence on the long side. I think anything into the underside of the 20-day, that quarterly pivot or retest of that 37,000 level are going to be really tough for the longs to get through. So, like, again, I don't trade crypto at all. I trade a lot of the equities following it. So, like Coinbase, Riot, Mara, those names are constantly, they're liquid enough. They have enough range. and they're going to follow the crypto market. That's the only reason I really pay attention to Bitcoins, because I trade those. So if crypto were to rally into those levels, I'm probably looking to fade things like coin. So that's it for the broader market, guys. We're going to jump over to the sector analysis real quick. Let's head over to barchart.com. You guys can see the short-term matrix here. Again, you know, if this is your first time watching this, I tend to look at this, but I use it. I can't just look at this by itself. I have to use this in conjunction with the sector ETF charts, because just because something was down big, is it down big into a support level in an uptrend, or are we down big and getting extended to the downside where, you know, it might not be a safe short because it's going to have a rally, or vice versa on the long side, right? So this by itself isn't enough for me to just look and say, oh, this sector was strong, this sector was weak. You still got to look at the context, okay? So consumer discretionary is still really weak. We've talked about this for a few weeks now. When, you know, the market is doing what the market's doing, and you have this inflation running rampant across the country, people's pocketbooks are getting a bit tighter. The things that they're not buying are the things that are from the consumer discretionary sector, right? IT got smoked last week too, and so did financials. So we will go probe into those charts real quick and take a look and see what's happening under the hood. So I made notes on most of the ones. XRT, you know, I think just like with the broader market, a lot of these I'm going to be able to look for longs using last week's lows as risk. So I think XRT has room to move back up into the underside of the 20-day. I think if you get flushes back in towards 64, 63, you know, you're going to have last week's lows to play off of, and you can look for individual names that are also kind of selling off into support. Like, you know, just, I'm not talking about like long-term support, just some recent levels where we've held, and you can have very defined risk where you can put on some trades. And it's not about, is your idea going to be right or wrong? It's about, are you getting an asymmetric trade out of it, right? If it's an asymmetric trade, you don't got to be right that often. And to be honest with you, when you get this extension down, like we've seen in so many of these names, and then you get the bounce, a lot of times you're going to be presented with some asymmetric opportunities if this thing were to come and retest some levels, okay? Especially if you're looking at where the bigger picture target is. Like if this is going to go back up to the 20-day, you know, buying a dip, that's very asymmetric. Let's say you get in at 64 and the 20 days up at 70, right? What are you risking? A point? You're risking a point to make freaking 6-7 points? Like that's the asymmetry that makes it so you don't have to be right all the time. Same thing with XLF. I think, you know, got plenty of room back to the 20-day. I think we've got a bit of a reversal happening, a near-term bottom, not a long-term bottom, just a near-term one. And I think you can play flushes, risking last week's lows. Real estate got smoked. You can see the big sell-off. It's bouncing right into the underside of the monthly 20 and back into this recent level that it broke. Again, I don't trade a lot of the real estate sector at all, but I do follow it because I'm interested in real estate in general, and I am kind of like trying to figure out how correlated some of the stuff we see in the stock market actually translates out into the macro world, the actual world. Healthcare, still really holding on to this key level that we've been talking about. You can see it's trying to have a bounce. Again, just like we were talking about, you got plenty of room up to the 20-day. I think you can buy dips risking last week's lows on individual names that are set up. You know, like there's some fun names in here. And in fact, when I was doing my FinViz scans, the screeners this weekend or on Friday, I noticed a lot of the healthcare names were on there, like Eli Lilly, Merck, Pfizer. Like a lot of things were showing up on my scans, and they were from this sector. And so CVS is one of my favorites to play out of this sector. And so I may be looking at some things to trade on CVS. It's not actually in the Sunday prep this week, but it's definitely on my mind, right, because of this chart here. Building materials and industrials still kind of just, you know, well, let's materials first. You know, they're holding on to key level, kind of like just like the healthcare sector was, right, that we were pointing out. Industrials is broken down. Again, these are two sectors I don't really trade. So I do follow them just to see what they're doing, and they are, like, industrials are rolling over, right? This is starting to finally follow the rest of the market. Utilities, still holding a key level. We've been talking about this key level, and what you have developing here is this push up, possibly a higher low here. I feel like you get back over that 72.80 level, and this may get a run like a leg higher. Again, I'm another sector I don't really trade much. Some very seldom, but sometimes, yes, there's a few names in there I will, but probably not this week. Consumer staples still looking healthy. Again, this is where, you know, these typically perform better in the later market cycles, so it's not a surprise here to see this holding really well. Again, I think you can play last week's lows as your risk, looking for names that have setups and are flushing, giving you that early weakness off the open tomorrow. And here again is that consumer discretionary. This one is really getting overextended to the downside. It really held this level from way back in 2020. And so if this is going to bounce, I definitely think there's some opportunities here. If this were to, like we've been saying, give us that early weakness, give us the ability to play off last week's lows where we get that asymmetric trade. So I like this sector right now for just an oversold reversion type play. Communications still looks really weak. Still every pop into the underside of the 20-day getting shut down. This one is not very extended to the downside like some of the other ones were. So the trades aren't, if you were to use that same setup that I'm talking about, it's not going to be near as asymmetric as some of the ones like the financial sector or that consumer discretionary sector. So the communication sector really doesn't interest me at all to play against last week's lows, just because I don't necessarily like this sector's, it's kind of in no man's land for me, right? If this were to speed up to the downside and get some of that extension, then maybe. But I think pops back in the other side of 20-day are still really good short opportunities. Biotech, again, this thing has just gotten really ugly. When will it bottom? I don't know. If this is going to be it, this is a very nice weekly candle to put in on extremely high volume. And that's one of the things that, you know, I've been noticing about the biotech sell-off is that volume is really starting to come in. Individual names are, there's a lot of them out there that are trading under cash, under their book value, under cash value. And if you know how to look at that kind of stuff, you can make a shopping list. And when this thing is finally ready to have a new trend develop, and you know, there's going to be a lot of opportunity. Tech, no different than what I was looking at with the Nasdaq. Thinking we can play against the lows. Plenty of room back up into this 140, 141 area, but you first need to get back down into these low 130s so that you will have some form of an asymmetric trade. Again, you'll keep hearing me say that, guys. It's a big focal point of mine, is making sure that, you know, if I'm going to risk my capital, that, you know, doesn't mean I don't take one-to-one trades, but those setups have to justify it. The trades I really like are the ones where, you know, I get those emotional moves and I get something where I can get tight risk on, and the reward is a multiple, and not just 1 or 2 times the amount of risk. I'm talking 3 or 4x, sometimes even more of a return, right? And energy and oil, again, both still looking really good, still behaving very well for things that are definitely leading the market at the moment. And you finally are getting that pullback towards the weekly 20. We talked about that on oil, right? And actually, let's go ahead and real quick just look at CL, which is your crude futures. Again, this is starting to look really good. You're getting higher lows right here on the weekly 20, and it looks like it's getting ready to make a move. The one thing I will say about like oil is very similar to oil and energy, reminds me a lot of what our friend Jay Mintzmeyer was saying about the shipping industry and the shipping sector. And that is typically when they look the best, that's when they are about to fail and roll over on you. And so I do have that hesitation with the oil and energy names, but there's plenty of individual names that have liquidity and range and should offer some really great opportunities this week. All right, so that was the sector analysis, guys. Let's get right into the long setups first. Strong stocks looking for continuation. The first name on my list is AEP. And basically this one right here is it's just a giant if-then statement, because right now there's no trade in it. I need this to get over this 101.80-ish. What is it? 101.61. Needs over 101.61, and then I would be willing to look to get long on a retest of like this 100 to 101 area. Just a retest of the flag that it's breaking out of. I do see that as over 101.61 is a really big trigger. So if it can get above that, you know, it's going to have some resistance from these prior highs. I'm hoping that we just get that flush back down, and then it starts to put in a trend, and you basically just want to join trend on dips with defined risk. That's the way I want to play AEP. Next name on the list is CVX. Again, like I said, guys, some of these oil names have good range and good liquidity, and they're good to trade. CVX, it's just like AEP for me. It needs over 171, and then I want to watch for a retest of that 169 to 170 area to get long, joining trend, risking previous lows. Again, define risk, and if something's going to trend, a lot of times you can let that pay you out, again, multiples of what the risk was, and that's really the point, okay? And so that's it for the strong stocks looking for continuation, right? I know it's crazy, but there's just not a lot of stuff out there setting up for this setup, right? But we do have the oversold reversion setups, and we have plenty of those because of where the market's at. Everything's been selling off. You guys saw what we were just looking at with the sector ETFs. The game plan is, if it's in a sector that has some downside extension, we're going to play against last week's lows. There's a lot of individual names that should have setups that are similar. Some of these names are same names from last week, guys. They just haven't, they haven't done anything to really get off my radar yet. So EXPE is the first one. So there are two things I could see happening here. Maybe we gap fill down here around 107, and there I might get interested again, especially if it does it, if it speeds up. Even if it were to come down to 116, right, and just come back to this recent support where that gap started. Guess again, hold on, I could just move this thing down. If I could click it, there we go. So right there, you get that. That's where the gap started. Here's where the gap would fill. If we flush down there, I'd be watching it. But really, I think what the play for me is I want to see this break above, is that Wednesday's highs? Over Wednesday's highs, and I think you can probably look to join trend. And it could even be a swing trade, right? The plan here is that this is possibly going to push back up into the underside of the 20-day and the monthly 20, which is right up in that 159 area, right? So if we're going to take this from 137 up to 159, that alone, even if you're risking the lows, is a decent risk reward. But if you're patient, we break over that level and you buy the next, it doesn't have to be on Monday, right? We might break that on Monday, maybe retest it on Wednesday, come back down and test some levels where there's some support. That's where I'd like to get in, because then the trade's going to be much more asymmetric. We'll see what happens. It's going to depend on how it behaves, but still looking pretty oversold down here. The next name was also from last week's list, and that is ICE. Basically thinking you can play against last week's lows, just like we were just talking about. So any kind of flush, I'm just trying to get better prices, right? I don't want to chase it up here and then have it roll over and finally give those better prices. I think the name of the game this week for these setups is patience. Do not be the person that sees it gapping up and going and chases it only to have it roll over and the real play be on Tuesday or Wednesday. We want as close to Friday or last week's lows as possible. That's the name of the game this week, guys. Next name on this list is LYFT. Again, playing against last week's lows. I think it's worth a shot to try to buy this in the 1820s. Same thought as on ICE. I think the turn is in and the risk is defined. What does that mean when I say the turn is in and risk is defined? Well, we're making a trade thesis that the turn is in, meaning this is the near-term bottom. So there's only two things that can happen. You can be proven right, meaning we never break these lows, and any flush down is an opportunity to start a position on this, thinking that this trend will reverse and we're going higher, or we're wrong and we know where we're wrong and we stop out. That's what I mean by define risk and the turn is in or it's not. And the last two names on this list are the big boys, and that's because these ones I know a lot of institutions are looking at, like trying to figure out when is the right time to be buying Apple. I think Apple put in a turn here. It was a key level on the daily chart. Made a lot of sense to see this bounce from right here. And I'm looking at any kind of flush down into 140. Like I'm begging for some 140s. Something where I can keep the risk mitigated. I don't want to be chasing this into 150, seeing that that's a key level for it to possibly reject, have it reject in my face, and then, the trade happens later. Don't wear yourself out taking unnecessary losses because you're FOMOing into trades, guys. Patience this week, please. And the last name in this list, like I said, is another big boy, and that's Microsoft. Exact same thought as Apple. Lots of institutions are going to be looking for that opportunity to get something on this trade, even if it's just for a few days or a week or so of a swing on this. There's going to be no shortage of people trying to get involved on the long side on these names. So again, I'm just going to have to create a trade thesis. If this, then that, right? If the low is in, then I want to buy scoops risking those lows. So the thesis is here is the turn is in, risk is defined. Any flush down to 250 is going to be me getting involved for sure on this. And that's Microsoft. Actually, I might even, the level I wrote down was 253, and I'm assuming that's going to have come from the low on, let's see. No, it was actually, let me zoom in a little bit on this 5-minute chart. It was this early pivot, it acted as resistance, and then we got back above it. So this 253 area is kind of key for me. I may take the trade there with full size and be prepared to stop out and try it again against Thursday's lows, right? I don't want to be buying this early weakness at a level and you know, trying to add down here, because what I'm going to end up is I'm going to end up with too small of a position size at the first spot, and then, you know, if it works, then I never had I didn't capitalize on the opportunity. And if it goes against me, now I've got a trade that's not working and I've got more size than I wanted. I'd rather take it full size 253, stop out. If it doesn't work, try it again off 250. That's Microsoft. All right, so now we're going to look at the short setups for the week. Obviously, no shortage of them at all because of, you know, just the general heaviness of the market still. But you got to be careful because as we saw last week, some of these names can turn into absolute face rippers, right? And so you're probably going to see some of these here with this list. I'm going to get rid of this panel. Can you guys? No, I think I need that so you guys can see the candlesticks. First name, AFRM. I am looking for a spike into the underside of the 20-day to get short. Can see it had a big gap up. I'm hoping we can push up into those levels. Again, I want to reiterate, guys, that risk management is always the first thought, not the last. I don't care about being wrong. I do care about staying wrong and allowing myself to take a loss that's much bigger than what I would be wanting to risk on this setup. So make sure you guys understand, like, the entry, let's just call it 28. If I short at 28, you guys see the same level. You guys understand the reason I'm shorting 28, but you guys don't, if you don't create your own trade plan, you won't know how to manage your risk. You won't know how to size your position. You won't know how to set where you're wrong at and stop out. So make sure you guys do way more work than just identifying where the heck I would like to enter this trade. It's much more than just an entry, guys. There's a whole trade plan that has to be created around these ideas. Next idea I'm looking at is Roblox. If I could type. Roblox, I am looking for, what I write down, 35 and 36. You know, I'm looking for these recent highs here and also this recent breakdown level. This is up 50% over the last 4 sessions, guys. Like, look at this. That's a 50% move straight up off the lows. You know, it doesn't look that big because of how far this thing has sold off, but that's a big move. So, like, I am definitely looking for this to exhaust out. Like, look back here what happened, right? How big was this move? This move right around 50% too, right? 50% rally, finds resistance. What happens? Lower highs, breaks lows, and then we continue the downtrend. I think we're going to get a nice opportunity in the 35 to 36 area, just like we had back here. That's not a small rally. We'll see how much more gas the longs have in the tank for this one, but I'm looking to fade that. Next one is SE. This one's up 40% in the last 2 sessions, from Thursday to Friday. Thursday's low to Friday highs, 40%. I'm stalking this for a fade. I like the annual pivot, the 20-day, anywhere in that area. If I start to see the seller showing up around 80, I'm probably going to build a position and get ready for this thing to have a pretty decent unwind. I really like the short idea on SE. And the last one I'm going to give you out of this section, guys, is Roku. I know I probably beat up on these guys too much, but I absolutely hate this company. I would love 110s. That's really, even though I think I may give it a shot if it were to rip come tomorrow into this 104 monthly pivot, I may put the trade on there and be okay with being wrong and stopping out. But 110s is so freaking juicy. Like, you get the downtrend line, you get the horizontal resistance line, you got VWAP Boulevard, you got those recent highs. Like, 110 is juicy. Like, we spiked 110 on Roku. And again, that might not be something that happens on Monday. That might actually be one that, who knows what it does on Monday. Maybe it has a strong day, but maybe it takes till Tuesday to really get going and get up to that 110 level. But I'm praying. That's all I can do, right? And the last section is overbought stocks that I'm looking for a reversion on. And there's only one in here, and it's not even quite there yet. It's DINO, DINO, and I'm looking for a blow-off type parabolic move into a 50 to 51 area. You see the annual pivot up there, monthly pivot. 50 is a psychological level. We are getting pretty extended from the 20-day. One thing I will note is I would like the volume to keep increasing, at least in the near term, because if this thing starts trading under 2 million shares, it's going to be kind of like a bit illiquid. If something's only trading 2 million shares, I'd prefer it to be a more expensive stock, because then you're looking at might be the same amount of shares, but the dollar volume traded is substantially more. 2 million shares isn't that much on a $40 stock. So I would prefer this to stay a little more liquid, but I am stalking it for a spike up into 50 to 51. So that's it, guys. That's the plan for the week. I'm going to head over to my Slack channel where the guys are feeding me the questions from the prep. Let's see what people have been asking. I'll answer some questions, and I'll head to the pool. Simon's asking about EXPE. Says looks really bad on the chart. It's not quite a falling knife, but it hasn't picked up with the market bounce. Decent long, looks off the Q quarterly pivot, but then the prior week's low is broken, so not bullish. So the extreme extension off the 20-day is the primary argument for a long. Is that correct? Let me go back to the chart. Like I said, I would like this to first break Wednesday's highs, because if we do, it's showing us the ability to finally stop making lower highs. I want the author of the story, Price, to tell me, hey, asshole, this is ready, possibly. The only way it can do that is the only way a downtrend can end is for something to stop making lower highs. So the first thing this needs to do is get above that Wednesday high so we can possibly start to turn this trend around. And then I want to buy dips. Again, I'm not near as enthusiastic about buying a flush unless this comes down to 115, which is where that gap started. And then even then, I would not hesitate to stop out of that and re-enter if it was something that wants to fill this gap down around 107. But no, I am not playing. I do not care about this quarterly pivot or this monthly pivot at all. Zero. Because just like you were pointing out, Simon, to get down there, we have to make new lows. And that's too close, right? This thing makes new lows under 126. 123 is not that far away, right? I don't care about that at all. This thing, if you guys remember trading this on the days where the earnings came out and then it was just super heavy, this thing can move. It can really, really unwind. So don't underestimate something like EXPE, guys. Have really bulletproof risk management on a name like that. PM Sunman. SE has earnings Tuesday morning. Do they? Let me go look real fast just to verify. If they do, the idea still stands. Yeah, so they do. It's Tuesday morning. So this idea is going to be for Monday only, or I will revisit this. Thanks for pointing that out, by the way. In case you guys ever notice I have a name and I forget to mention they have earnings, it very well may be because I didn't notice it. So don't hesitate to point something like that out. I appreciate it, guys. What I will do, though, is, we have this really key level as well. So depending on what happens with the earnings on Tuesday morning, this most likely will still be in play on Tuesday, possibly Wednesday as well. We are going to have to see what the reaction is to the earnings first. But on Monday, come tomorrow, this thing rips up into those levels. The idea that I pitched about the 20-day and the annual pivot and that 80 level still stand, okay? But thank you very much for pointing that out. Am I looking? PM Pawnage is saying, are you looking at UPST? I look at UPST every day, but right now the only way I would touch it is I would fade an emotional spike up into 70. But this thing's not going to 70 from 40 over. I don't want to say it's not, but I mean, it's a pretty damn big move. That's 83%, 85% from where we're currently trading. And I don't really want to be touching it short down here because it's so oversold, but I don't trust the long. If you guys understand what UPST does and AFRM, very similar companies, and they're involved in giving loans to people that don't have the best credit, right? Well, if interest rates are rising and people might start, tightening up their spending habits, these guys could have a bunch of bad loans on the books and stuff. Not the type of company or sector I want to be involved in with this type of market environment, and that's really the reason. So, in an intraday basis, if they have these emotional spikes and flushes, a lot of times I'll trade them for day trades or whatever, but they're not going to be something I would put on the Sunday prep. And not like I haven't had them on there before. It's just now it's a completely different market environment. PM Cristobal, dude, I think Benito's just adding the PM to their names. I think it's just Cristobal, yeah. Is saying SEA and K. Oh, is the K supposed to be for Kathy? It says Wood been buying a lot for ARK. So I don't know if you mean K as in Kellogg or you mean K as in Kathy, because she spells her name with a C if I'm not mistaken. So K is like, I have no idea. I don't think that's typically something ARK would be buying, but it's funny they would be buying C as well. I don't know. Are you sure? Are you talking about C, the ETF? Or are you talking about SeaWorld, which is SEAS? Neither of those. Like, I can't imagine her buying SeaWorld either, or Kellogg. But I don't follow. Like, honestly, her fall from grace is a great drama, but it's like I don't really care what they're buying, other than just saying like, dude, they're a pretty good example of why you need to manage risk, even if you're a fundamental trader. Okay, let's see. Yogi, 100% agree on the ES. Thursday was a short-term capitulation. Support levels around 4,000 and a hold around 39.75. 39.60 would be an absolute bottom. Come on, Ricky. Say we want 4,100, 4,200. Okay, I do. I mean, honestly, like, I'm very good at being able to flip my bias, guys. I'm just trying to be objective, and that's, being able to be objective by just reading what the trend is telling you really can help you a lot, because it avoids the age-old problem of becoming stubborn on a bias and not seeing the writing on the wall. If you guys struggle with that, one thing I can highly recommend is learning the basics of how stocks move, and I mean how trends form, how trends evolve, how trends work together on different time frames. Those are the kinds of things that you can study, learn, and be objective, black and white about, and you're doing a disservice to yourself if you don't really understand that stuff. Highly recommend that being a focal point of where you try to learn. Cristobal, tell them tell them the new traders that dividend stock helps because it's extra money. I can't give financial advice. I'm literally able just to give like my opinion on things I see. Yes, dividends are nice. I get some from my long-term positions in my IRA, but definitely isn't offsetting. It's not offsetting the losses or the drawdowns in those long-term accounts. So I'll leave it at that, and you guys can form your own opinion. Yogi says Nvidia on a pullback to 167 area. Yeah, and so all these names, like the tech names like AMD and a lot of these names are giving opportunities now where you can risk against Thursday's low, and you can put a trade on. Let's look at, so Yogi's talking about, what did he say, 167? Yeah, you guys should be able to really easily see that level where he's getting that from, right? Very important level. It was like Thursday's highs, the pullback held. And if you guys don't understand this setup, this is a super powerful setup. When you see something break these highs like this, and then off the open, you get this red 5-minute candle down and then a big green stick like that on the next 5-minute candle that breaks the highs. Typically, that's a really, really powerful long trigger right off the open, and you can see how that worked. Don't take my word for it, guys. Go find thousands of charts that look just like that, and you'll be able to find these setups too and have conviction in them. That's really what it takes to trade them. I'm going to quickly glance, see if there's any more questions. Yeah, I know. So, Cristobal, I know about ARK and Kathy Woods, but what I'm saying is you type SEA and then you space K. Kathy is spelled with a C, so you threw me off. I thought you were possibly talking about Kellogg. Yeah, and I'm not familiar with SEA unless... Yeah, I would have to go look into that one. I've never ever looked into what this ETF even is. It says it's the Sky Cargo ETF. And to be honest with you, when I look at this, I don't even see how it's possible for her to be buying this considering the volume it trades. This is not liquid, right? So it's averaging, it's average volume every day is 6,000 shares. I really don't understand how Kathy Woods or ARK is buying SEA. I think maybe you're mistaking it for something else. I mean, really, like I said, so they're buying SEA, the ETF. I'm looking at the right chart, and you're saying that that's what they're buying? I don't see the volume to support something like them moving into this stock or this ETF. I could be wrong, but again, like Kathy, one thing a big fund like ARK needs is they need liquidity. So finally this coffee cooled down. It's not burning my mouth. Javier is asking about LTHM at 24.10. I like the level. You got the 50-day and the 20-day and your annual pivot and the quarterly. A lot of stuff down there. And I guess if you want to trade something like that, what you do is the exact same thing we were talking about, where you have to figure out where your risk is defined. And I think the way you would define risk on a name like this is Thursday's low a day. NEM, he's pointing out 64.50 or 63.20. This one, I would like to see a reason to get involved first. Obviously, I see those key levels. If it flushed emotionally right into the, first level I like. Yeah, I mean, I like the levels you're pointing out. It had a big move down into there. Friday, it didn't bounce like a lot of the other strong names did. That would be one thing that would concern me. Maybe it is heading down to the 200-day. But I don't know if I'd want to get involved at the 200-day if it just recently broke those lows. Yeah, see, so that might be what you mean, Cristobal. Ragu's pointing out, thought it was SE. SE is definitely a Kathy Wood name, right? This is what Kathy's been buying. I don't think she's been buying that illiquid ETF. But yeah, she's 100% been involved in SE, TDOC, like all those names that were in perpetual downtrends. That's got Kathy Wood's thumbprint all over it, all over it. No. Yeah, Yogi's saying that SEA ETF is not something that's tradable. I agree, and I think that there's just a confusion happening here. I think what Cristobal was meaning was SE. Long level for Luna. We're not going there, guys. We're not going to talk about that. All right, guys. We're going to wrap it up there. I appreciate you guys spending a little bit of time with me on the weekend. Hopefully you guys got some value out of that and see some ideas for yourself for the trading week ahead. If you guys have further questions or you guys need guidance or structure in your trading, or you need to help answering those 3 questions we were talking about earlier: how to manage risk, how to fully define a strategy that you can trade, or how to systematically size and grow organically, come on over to truetrader.net, sign up for the 5-day trial, $30, guys. You really don't have anything to lose. If you guys want to be monthly members, I think it's like $100 a month. It's laughable. It's absolutely laughable, the value you get for that price. Yeah, and if you guys aren't in there, then I'll probably see you, talking trash on Twitter, I like to make jokes. And if not, then I'll see you guys next Sunday for the next Sunday prep. Stay safe out there. Everybody manage risk first, and then execute.